Key indices closed lower on Wall Street as first quarter GDP growth comes in significantly below estimates at 1.6%. Futures, however, rally on strong earnings from Microsoft and Alphabet. Asian markets have opened higher ahead of Japan's policy decision, while the GIFT Nifty is signaling a mildly positive start for our Indian markets. Crude prices gain about 1%, with Brent crude trading at $89 a barrel despite US GDP growth missing estimates. Gold prices remain largely range-bound, about $2,300 an ounce. Bajaj Finance's fourth quarter numbers miss estimates as cost of funds rises. The NBFC has also requested the Reserve Bank of India to review curbs placed on the e-com and Insta EMI card business. IndusInd Bank, meanwhile, reports a mixed set in the fourth quarter. Tech Mahindra reports a beat on revenue and margin comes in line with street expectations. New CEO Mohit Joshi unveils a 3-year turnaround plan. And in key earnings to track today, HCL Tech is expected to deliver flat revenue growth and a contraction in margins in the fourth quarter. Strong volume growth and margin expansion is expected from Maruti Suzuki, while the new Nifty entrant Shriram Finance is expected to deliver healthy profit growth in the fourth quarter. And the second phase of the Lok Sabha elections begin with polling underway in 89 Lok Sabha constituencies across 13 states and union territories. Voting will take place across all 20 seats in Kerala. Bengaluru will vote as well. Good morning. It's a Friday morning. It's the final trading day of the week. The second phase of the Lok Sabha polls are underway, and you're watching Power Breakfast on CNBC TV 18 in the Mumbai News Centre. I am Hormuz Fatakia. Let's first take a look at how the Asian markets have opened this morning. It's a positive start to the Asian screen as well, ahead of the all-important Bank of Japan policy decision that is expected in a few minutes from now. The Taiwanese index is up 1.5%. The Hang Seng is also trading with gains of over 1%. The Japanese markets are also doing well for themselves, and all eyes are on the Bank of Japan policy decision, with some reports also coming in that they may end up hiking rates faster than estimates. So we'll keep an eye out on the Bank of Japan. But from Asia to the United States now, the Wall Street ended Thursday's trading session lower. The Dow Jones slipped around 375 points, while the S&P 500 fell 0.5%, while the tech-heavy Nasdaq also shed around 100 points. Treasury yields jumped, which pressured equities further at their sessions highs. Both the 10-year and the 2-year Treasury yield hit the highest levels since November of 2023. But the big cue from Wall Street is that the GDP growth for the first quarter came in at 1.6% compared to estimates of 2.4% and against 3.4% in the fourth quarter. CNBC's Steve Lisman breaks down the Q1 GDP print for us and what all of this means for the Fed going forward.
This morning's GDP report exaggerates economic weakness, but it doesn't exaggerate the challenge that inflation gives to the Fed and to the economy. Take a look at some of the details here. Details of the report show GDP, there's the 1.6 down from the 3.4 and below the estimate around 2.5. Consumer spending, though, reasonably strong, 2.5 down from 3.3. Business spending, even more of a surprise to the upside. Good spending, by the way, on intellectual property, and that was an improvement from 0.7. But inventories took off 1/3 of a percentage point, down just a bit from the 0.4, and trade took off nearly 0.9 of a percentage point. So add those two together, you get 1.1%. You're a lot closer to the estimate than you are without them. What it means is at the core of the economy, business and consumer spending is doing just fine, easing a bit from Q4, just as you would expect in a soft landing scenario. The inflation numbers, they are not fine, and they took off more than expected from the top line. Take a look at these numbers here. Both core and headline inflation, core, of course, takes out food and energy, rising sharply in this report. Core PCE inflation hitting 3.7% year over year, up from 2%, erasing a half year of progress. The bulk of the increase coming in service sector inflation. Well, of course, all of this lowering those probabilities. June rate cut, that's not on, just 10% now. And a lot of damage has been done to the outlook for July. I know your next guest thinks it's going to happen, but there it is at 32%. And September, you know, still over even money, but a lot less over even money than it used to be. More or less, the modest slowdown that we got in these numbers when you take out the inventories of trade, consistent with the soft landing that everybody has been hoping for. Actually, maybe even a little bit hotter. The inflation numbers, not consistent. It extends higher for longer for the Fed. And as you know, tomorrow's number is going to be a big issue as to the timing for the Fed, because what we need to see is Where was the surprise in inflation? Was it in January, February, or March? And that's why you got to tune in at 8:30 tomorrow for those inflation numbers.
Let's also listen into some important reactions coming in on this. First up, U.S. Treasury Secretary Janet Yellen, who says the U.S. economy remains strong. Speaking to Reuters, she also said that the inflation continues to trend downwards. Listen into excerpts from that conversation.
I think I still see in the underlying core drivers of economic activity considerable strength. So I think that the U.S. economy continues to perform very, very well. And I think, to me, that was evident. The headline figure was off a little bit, but for reasons that are peculiar and not really indicative of underlying strength. I don't see any reason why unemployment needs to rise to bring inflation down. To me, the data says we're on a downward path for inflation. It's not exactly a straight line.
And staying with the U.S. macros, the Fed, the economy and the market setup, let us listen into some important opinion coming in from Apollo Global Management's Torsten Slok.
The labor market is still very strong, so the economy continues to do well. I don't think they will cut rates this year. If you do scenarios and expectations for what inflation will do over the remaining 8-9 months of this year, you still can get a scenario where inflation can be in the 2, 3, 4 range. So in other words, the tailwind that we have from easy financial conditions, what is done to increase in the stock market, to home prices, at the same time, cash flows in fixed incomes are very high. So it's not a surprise that consumption, maybe not in the GDP report here, was a bit special, but generally speaking, retail sales has been strong. That all argues for more non-farm payroll strength, more inflation strength, and that's why inflation is picking up.
And that's all we have on the global market action. But how will all of these cues impact our own markets this morning? We have our research team joining in with the Power Prep segment, with the trade setup, the stocks to watch out for, and the F&O setup as well. First up, Ekta is joining in to get us all the market cues we need to watch out for this morning. Good morning, Ekta. It was a strong recovery yesterday. What are you watching out for this morning?
Morning, Hormuz. Well, based on what the global markets have done or the US markets have done, then hopefully there should be probably, a continued resilience for the Indian markets. So the markets did recover from their opening lows on expiry day yesterday. The markets ended higher for the 5th straight day. The advanced decline ratio was positive at around 4:3. This morning, we have the US markets where the weekly jobless claims as well as the GDP data was out. The GDP data has disappointed the street, and that is the big cue today. In terms of Friday's data, we have the March personal consumption expenditure index as well. So I think the street will be watching out for that very closely in terms of determining what the Fed could do. Because remember, preceding the GDP data was the manufacturing data from the US, which also disappointed. So Asia is largely higher, however, ahead of the Bank of Japan, decision. In terms of results post-market, we had a lot of numbers to watch out for in terms of results post-market. For example, Bajaj Finance, IndusInd, Techem, Zenza, Cyient. So all of these companies will be reacting to its numbers. And today we have cues coming in from Bajaj Finserv, CSB Bank, HCL Tech, Maruti, SBI Life, Shriram Finance, like you mentioned. So all of these companies would be in focus. Remember, tomorrow also we have the likes of a couple of big banks coming out. So it'll be important to watch out for. Phase 2 polling begins today. So that would be another important domestic cue. So despite sluggish global cues, we could probably be singing to our own tune at this point in time.
Thanks a lot, Ekta, for all the cues that you need to watch out for. But over to Sudarshan now, who would list out the stocks that you need to watch out for in today's trade. Good morning, Sudarshan. What do you have for us?
Morning, Homa. So we'll start with Tech Mahindra. Revenue has come in higher than estimates, while margin was in line. Constant currency revenue growth has fallen 0.8% versus estimate of 1.3% fall sequentially. Margin has improved 200 bips to 7.4%. Company also has unveiled 3-year turnaround plan, and company targets top-line growth above peer average and 15% margin by FY27. Bajaj Finance numbers were below estimates as cost of funds have weighed in. Calculated net interest margin has come in at 9.69% versus 10.11% year-on-year. NII was down 7% against estimate at 8,013 crore. company has requested RBI to review the decision on e-commerce and Insta EMI card business. IndusInd Bank mixed Q4 earnings. NI was below pole. Other income and lower OPEX have driven profit. NI was down 2%. Profit is up 1% versus estimates. LTTS mixed Q4 earnings. Constant currency revenue growth at 5.1% versus estimate of 4.8%. Margin was at 16.9% versus estimate of 17.2%. FY25 guidance is lower than estimate 8 to 10% growth. Emphasis, rupee revenue is up 2.2%, margin is flat at 14.9%, constant currency revenue is up 2.1%, and new deal total contract value was weak at $177 million. Schaeffler India, weaker than consensus expectations, missed on all fronts. Margin has come in at 18.1% versus 18.6%, that is down 47 bips year on year. Sandur Manganese has entered into a share purchase agreement for Adzer Steel Private, and this acquisition is expected to be completed in 7 months. Tata Steel to proceed with £1.25 billion investment to build electric ARC furnace in Port Talbot.
Plenty of stocks to watch out for as always. Thanks a lot, Sudarshan, for joining in. And lastly, Nigel comes in with cues from the FNO space. Morning, Nigel. It's the start of the FNO. It's a new FNO series. What are you watching out for this morning?
Well, April series is good, right? Hormuz, we recovered a fair bit from the low point, and in fact, the markets ended higher as well for the series itself, but though the broader markets were big outperformers. Now, if you look at the intraday chart, you'll see the way the markets recovered in yesterday's trade. It was phenomenal. We went closer around 22,300 and ended closer around 22,600. And the intraday chart, at some point of time, will come up for you on the screen. But, Hormuz, what I always say is, I like a net short market. I keep repeating this point. People were saying that, the FI net short positions went to 1 lakh contracts. That's a blessing in disguise. History tells us when the FIs go aggressive on one end, well, that's when you normally see a short covering bounce. And it's played out yet again. Yesterday, we saw close to around 70,000 contracts in terms of a swing factor. We started the day at FI net short at 1.24 lakh. We ended at around 53,000 net short contracts coming for the FI. So that's the power of short covering up for you on the screen. PCR, well, we're close to the upper end, actually, closer to the upper end, I would say, because normally the range is 0.7 on the downside to around 1.6. So we're holding at around 1.3. That's just a data point that I'll put up for you on the screen. What about the levels we're looking at? The 20 and the 50 DMA, very, very important in terms of reference points. I'll tell you what, if we can hold on to this 22,150, 22,200 odd mark, it's a buy on dips market. You need to participate on the upside. If you're looking at resistance level, I'll be looking at it in 300 points. So 22,700, then 23,000, then 23,300. That's approximately the number that I'm looking at. The Nifty Bank did well yesterday as well. Reference point on the downside is the 20 DMA. The recent high comes up for you, 49,000 odd. And we have a lot of cues coming in the May series. And historically, it's been a good one. So all those cues should come up for you on the screen. Elections, earnings, progressive monsoons, and what happens in terms of geopolitical tensions as well as the Fed. Back to you.
We'll see if sell in May and go away has any form of impact on the markets. But on the ball, as always, Nigel, thanks a lot for joining in. Time for a short break here on Power Breakfast. When we return, Bajaj Finance, IndusInd Bank and Tech Mahindra will be in focus after having reported their fourth quarter earnings. We'll get you all the details on the other side. Stay tuned. We'll be right back. Back with us here on Power Breakfast, and it's time to put the spotlight on some earnings that were reported after market hours yesterday. First up, we have Bajaj Finance that reported their fourth quarter numbers that were below poll expectations. Abhishek is joining in with the earnings fine print. Abhishek, good morning. How do the numbers look like?
Good morning, Omar. So the numbers were on the weaker side when compared to our poll as well. The NII did get weighed in by the cost of funds, which actually dented their net interest income as well as profitability. One key point to note is that they have made requests to RBI with respect to two of their products which were actually banned from getting new customers on board, which is e-com and Insta EMI cards. They have said that they have complied with all the RBI worries, and now they are asking the RBI to review the same and revoke the ban. In terms of FY25 guidance, they say that AUM growth remains on track with respect to 26 to 28% growth rate. Net interest margin, now this is a new guidance that they have said net interest margin will fall by 30 to 40 basis points in H1 of FY25 due to elevated cost of funds. So cost of funds will peak by July or August 2024, and credit cost will remain in the range of 1.75 to 1.85. Hence, they see see ROA of about 4.6 to 4.8%, and ROE in the short term will be under pressure or marginally lower than the long-term guidance. So P&L is below pole, NII is 6.7% below pole, PAT is 1.65% below pole. Key ratios, if you take a look, calculation shows that net interest margin has declined by 42 basis points YOY and about 15 basis points sequentially. The cost to income ratio remains almost flat on a sequential basis. However, return ratios have declined both YOY and quarter on quarter. Back to you.
It's a busy day for you, Abhishek, because IndusInd Bank also reported their fourth quarter numbers, and that was a mixed bag. What do the numbers look like over there?
Well, it's a mixed bag, as you mentioned, coming out of IndusInd Bank Q4 results versus our poll. The NII was 2% below our poll. However, profitability was 1.1% ahead of our poll, as they made use of the provision pool of about 300 crore in this quarter, which actually aided their PAT this time around. Asset quality 14-quarter low in terms of annualized slippage ratio, which has come in at 1.66% versus 2.16%. Now, despite the lower slippage ratio, the gross NPA and net NPA in absolute value have increased by 5% quarter on quarter. So net interest margin is at 6-quarter low of 4.26% when compared to 4.29% in the previous quarter. Their operating efficiency is the weakest that I am seeing in last 8 years or even more. Cost to income ratio has increased to 48.2% when compared to around 44.9% in the same quarter last year and about 47.4% in the previous quarter. ROE or return ratios are also one of the lowest. So ROE is the lowest that you are seeing in last 5 quarters. Back to you.
Thanks a lot, Abhishek, for all the earnings fine print for both Bajaj Finance and IndusInd Bank. Both will be in focus this morning. And in more earnings now, Tech Mahindra's fourth quarter numbers came in largely in line with street expectations. The constant currency revenue declined marginally to 0.8% sequentially compared to a CNBC TV18 poll of a 1.3% fall. The EBIT margins were in line with expectations at around 7.35% compared to 5.4% in the December quarter. The highlight, though, was the new CEO Mohit Joshi's FY27 strategy, and that was top line growth above the peer average and an aspiration of 15% EBIT margins. He aims to take the company in the top 3 among peers when it comes to profitability beyond FY27 and improve its return on capital employed or ROCE to 30% plus. Let's listen to what he had to say in the post earnings call.
We are now very confident that Q4 marks the low point in our year-on-year growth trajectory, right? Which means that we are confident that from Q1 onwards, you will start to see an improvement in our year-on-year performance. There will obviously be volatility between quarters because, again, this is the year of turnaround, so you should expect to see volatility. But beyond, Q4, there will be a year-on-year improvement, and we expect to come back fully to growth by the second half of the year. The volatility in spends is still very high, given our sectoral mix specifically and our exposure to telecom. Visibility is still limited. Some elements of our business, like our field services business that we have in parts of the Middle East and Africa, that is still stressed. So we will see volatility, but the confidence is there in the longer-term trajectory of the company.
Tech Mahindra CEO Mohit Joshi there sharing some positive commentary on the road ahead. But time for a short break here on Power Breakfast. Up next, we get you cues from the commodities market. Stay tuned. We'll be back on the other side. You're watching Power Breakfast on CNBC TV18, and 89 Lok Sabha constituencies across 13 states and union territories will go to polls today in the second phase of the Lok Sabha elections. This includes the remaining assembly segments in Outer Manipur as well. Over 1,200 candidates are in the fray in the second phase. Parikshit Luthra is here to give us more details on that. Parikshit, over to you.
India votes for 88 seats across 13 states in Phase 2. The number of seats is actually 89, but polling in one seat has been postponed due to the death of a candidate. The NDA had won 62 out of these 88 seats in 2019, and the opposition of the India Alliance parties had won 24. Now, the NDA had a 47% vote share, and the India Bloc had a 34% vote share in 2019. There are a total of 1,210 candidates in the fray, out of which 250 have criminal cases against them. There are 574 candidates who are graduates and above, and there are 100 women candidates. The richest candidate in this phase is Venkatramane Gowda of the Congress Party, with assets worth Rs 623 crore. All seats in Kerala are going to polls. BJP has never won a seat in Kerala. Thiruvananthapuram is going to see a three-way contest between Shashi Tharoor of the Congress, Rajiv Chandrasekhar of the BJP and Pannian Ravindran of the CPI. Wayanad will be an important contest as well between Rahul Gandhi and CPI's Annie Raja. You have V. Muralidharan, a Minister of State for External Affairs, contesting from Athingal in Kerala. We're also going to see a contest between Congress and the BJP-JDS alliance across 14 seats in Karnataka. Some of the key candidates in Karnataka include Tejaswi Surya of the BJP, H.D. Kumaraswamy of the JDS, D.K. Shivakumar's brother, D.K. Suresh, on a Congress ticket. In UP, you have 8 constituencies like Noida, Ghaziabad, Mathura, Meerut, Bagpat going to polls, and candidates like former Union Minister Mahesh Sharma, Arun Govil, Hema Malini, all contesting in this phase. Voting will come to an end in Rajasthan, with remaining 13 out of 25 seats going to polls. In Kota, you have BJP's Om Birla seeking his third term against Congress's Prahlad Gunjal. In Jodhpur, you have Union Minister Gajendra Singh Shekhawat against Congress's Karan Singh Uchiyarda. Among other states going to polls are Chhattisgarh, Madhya Pradesh, West Bengal, Maharashtra, Assam, Tripura. Over the last few days, we have seen a highly volatile campaign with Prime Minister Modi hitting out at Congress over Muslim appeasement policies and recently over Sam Pitroda's inheritance tax remark. Let's see how the country votes in this phase.
Parikshit, thanks a lot for joining in. And as promised, Manisha Gupta now joins in with all the updates from the commodities market. Good morning, Manisha. What are you picking up this morning?
Thank you for that, Hormuz. When I'm looking at metals and water, tremendous rally into this one. It's non-stoppable, really. When you look at the copper prices, we're trading at a 2-year high, a new 2-year high, that is. There are supply disruptions at mines. There is strong demand estimates coming in from various sectors. And interestingly, a very important report from a BlackRock analyst suggesting that copper prices need to be at a $12,000 a ton to incentivize investments in mine if we are to meet the kind of demand estimates that are being put out by 2030. So, well, yes, there's a big push that we've seen in case of copper prices, another 2% of gains in the overnight market. Even stronger moves is what we've seen in zinc prices, that is trading at a new 12-month highs. Strong gains have come back in case of gold and silver as well. Within energy space, the natural gas prices are now trading at a 7-week highs. We've seen 27% of an up move in natural gas in the overnight markets. And with that, the crude oil prices also are trading above $89 a barrel right now. Well, the markets also are reacting to the U.S. data, where the first quarter GDP grew lesser, but the U.S. consumer prices plus 3.4% tell you that inflation is still a concern. That has led to a decline in dollar, and the tangible commodities are back in focus.
Thanks a lot, Manisha, for all the updates on the commodities market. We'll keep an eye out on all of these cues. But with that, it's a wrap on this edition of Power Breakfast. Bazaar Morning Call comes up next to set you up for Friday's trade. From me and the team that put this show together, thank you so much for watching.